Hi everyone, welcome back to LMN options trading. It's been a while since I did a video on a trade that I'm executing, but as I mentioned in my recent portfolio review video, right now it kind of seems like the market is quite heated. We can see that in how the market continues to make all-time highs and how the VIX continues to be kind of moving downwards. So just kind of want to be a bit more on the cautious side. I've not really executed that many positions recently. Okay, so the trade that I've taken is in this company called VEEV, which is a cloud solutions company for serving the pharmaceutical and the life sciences applications industry. I believe it's built on the CRM Salesforce platform. So the news appears to be, some positive news in the recent days and weeks. And so, I don't generally trade on news, but it just kind of gives a rough sense of the market sentiment. So let's take a look at the financial data. So let's take a look. We can see the revenue figures are increasing. We can see net income figures are increasing as well. Earnings per share is up. Operating cash flow is up and increasing. So is free cash flow. We come on down to net margin. We can see that it's increasing and it's way above the figure of 10 that I look for. And lastly, interest coverage is 0 because I believe the debt is basically negligible, which is a very good sign. The only issue is that when we come over to valuation, the stock is kind of overvalued. And so recently there was there's a price correction over the last few days. I mean, this is quite a sizable correction. I think it's about 8%. 8% price correction as of now. The financials seem to suggest that this is a company that in the long term probably will continue to do quite well. But right now it's just kind of in a correction. This is where there's fear, and fear is kind of a good opportunity to look for entries in a stock, especially a stock with very strong fundamentals. So obviously I'm not going to be taking a very sizable risk position because the stock is still overvalued. So we come over to the brokerage platform, and for this demonstration I'm going to use the Tastyworks platform. So the first thing I see is the implied volatility rank is 38.6, which is moderately high. Generally, when the stock price experiences a large correction, we can expect the implied volatility of the stock to increase. So this is quite normal for a stock that has just made a move like VEEV has. So I'm going to look for a bullish credit position. So I will short the put option, which is at 30 deltas, and that is the 300 put. And I'm going to long the 290 protective put, which is the next strike out of the money. For this trade, I will collect a net premium of $265, and my max loss is 735. So the ROI on this trade will be the maximum profit divided by the maximum loss, and that gives me an ROI of 35%. And if you look over here to POP, it says 68%. So there is a 68% chance that I will make the $260 profit. So on September 17, as long as VEV is above the $300 short put strike, I will make the maximum profit on this trade. And if it falls below $290, then I will incur the maximum loss on this trade of So the probability is in my favor and the data decay is in my favor because these are out of the money options with only extrinsic value, which will decay over the next 37 days. And that's all. So thanks for watching. If this video was helpful for you, please leave a like, leave a comment, subscribe to the channel, and we will catch you again in the next video.